Hello all. Welcome to Value Plus the Family Office, Knowledge Plus for Wealth Plus presentation from a research desk. After looking to the introduction to tax and the various deductions, we now come to the hot topic, that is advance tax payment. But before that, let us see what happened in the financial markets last week. Last week the major news was HSBC India Manufacturing PMI was down slightly from 51.3 in November to 50.7 in December. This can have a negative impact on sentiments as decline in manufacturing growth can be there. Core industries output grew to 1.7% in November vis-a-vis 0.6% in October. So we can expect a positive IIP growth due to the weightage of 37.9% in the overall IIP. Sensex was down by 342.25 points and close to 20,851.33 at the end of the week. FIIs remain net buyers in the equity and debt segment with a net inflow of Rs 1,541 crores and Rs 1,656 crores respectively. The chart shows the price performance of different asset classes. The gold was the highest gainer with a rise of 2.03%, whereas WTI crude was down by 6.34%. Crude prices was down on the back of weak demand from China and oil production in Libya returning to normal. Next week, the financial markets will be eyeing on HSBC India Service PMI numbers, which is to be released on 6th January 2014. Index of Industrial Production data for the month of November is set to be announced. Kickstart of Q3 financial year 14 earnings season with Infosys set to announce its Q3 numbers on 10th January 2014. We now come to our hot topic, that is advance tax payment. Let us start with the introduction. Payment of tax liability by a person before the end of the financial year is called advance tax. It is one of the major tools used by the government to collect the tax from the assessees all over India. This tool mainly aims at reducing the last moment hassles to an assessee for payment of tax liability, which may be due to shortage of time or funds. An assessee becomes liable to pay the advance tax when the tax payable exceeds Rs 10,000. Now let us see what are the advance tax rates. Before 15th September, the assessee should pay not less than 30% of advance tax liability. On or before 15th December, the assessee should pay not less than 60% of advance tax liability, and on or before 15th March, whole amount of tax liability as reduced by the amount paid or already paid in the earlier installments. Now if the advance tax paid is higher than the total tax liability, then the assessee will receive the excess amount as refund. And if this excess amount is more than 10% of the tax liability, then 6% interest will also be paid on it. Now let us see what is the interest penalty under the section 234B. Interest payable for default in the payment of advance tax. If an assessee has to pay the advance tax and he has not paid such tax, or if the advance tax paid by him is less than 90% of the assessed tax, then the assessee has to pay the interest at 1% every month or part of the month. Interest penalty under section 234C stands for interest payable for deferment of advance tax. When the assessee has failed to pay the tax on pro rata basis over the course of the financial year, then the interest becomes payable. Interest is payable at 1% for 3 months on the amount of the shortage of advance tax in the first and the second installment, and 1% for 1 month in case of the last installment. How to be worry-free? Paying advance tax is not a difficult task. It can be paid online through the website of Income Tax Department. The other way to pay the advance tax is by filling the challan, that is ITNS 280, and submitting it at the designated branches of the specified banks. Lastly, we would like to say that income tax is an investment and not an expense. Thank you. Please share your valuable feedback on our email ID info@valueplusinv.com. Thank you once again.